Welcome to TradingTheNBA.com. This is John. This report is for the 22nd. Well, Santa came back right at the 50%. Fibonacci here. We saw support early on. We got the earliest glimpse of this the other day when we saw the tick up of the magenta, and it was just starting, and it seemed like after a significant decline right there at the 50% was an opportunity. We'd had the declining orange as well with short-term buyers lifting, and then we got a little bit of support here from the midterm buyers. Still nothing spectacular, but it was a pretty nice bounce. 65 points was a decent move, and fairly one-directional most of the day. So not bad at all. Is it sustainable? Well, we're going to find out. I don't think so with the weight leading as it is now with the MBI. It's probably likely to hit some resistance, particularly as we hit towards the next Fibonacci level, or as I call it, the Morganacci levels, particularly because we adjust to them. But the Nasdaq's about to hit 50%. So that will probably be more significant there, and we'll see if they're able to sustain that move. But that's a solid crossover of the magenta, and combining it with the same cross of green. Any pivot, though, of that orange coming back is going to be the cue that it's not going to last. But if it sustains itself by continuing to dip, then be all set. Treasuries on the day, no real change from the softening, which just means that there's this acceptance. And we did see that there was a sentiment change, uh, positive from viewpoint for the economy. So with that kind of situation is what we were talking about briefly the other day. The various signs, if there's optimism, if people have been able to absorb uh, the higher price from oil at this much lower level, even though we're getting closer back up to that 80. I think if you see it get into that mid 80 range, then I think that will probably change a significant amount of perception. But that was quite a bounce off the previous news the other day, the significant crude draw. And so with the positive sentiment, it's an indication that, well, maybe that was because of usage, and therefore that's bullish, economically speaking. But has its prices. Of course, it's great support for gold because it would indicate that inflation potentially has not been solved, and that we could see some continuation from that. And from a Eurozone standpoint, nothing particular, though we get some softness, already flattening out a little bit from there. But look at that steel coming from the deep low, and we've had red DOC over 7 for quite some time. That is abnormal and not natural at all. Some would say the decline wasn't normal, but in reality, it actually was, given the state of where things were with the EU and the energy needs. Still not sustainable, even where it's at the 106 level. Regardless of that, I was expected to just move sideways if any slight correction, unless there's again some significant news coming out of the Eurozone, i.e., Ukraine, that situation heating up in any way, shape, or form. We recognized the softness that was going to come with Bitcoin. It wasn't that bad, modest. But interesting, it had traded so similar to the market, and to see the market up as big as it was, and almost no positive activity for Bitcoin. Just means the crypto winter has not faded, no spring yet. So we'll see if we've got that under control from an ETH standpoint. It's a little bit better, held on fairly strong at that 23% level, and magenta spike above there. So we're not getting any beneficial read from the crypto market as far as any consistency, and I think that's been reflected in the market. Of course, again, right before I to my report, TradeStation doing that same lovely thing with my 50K, 5K charts. It's becoming untenable. I keep trying to reset it, but every time they come up, I get that same disconnect, and no way around it. So they're trying to make that run prior to Christmas. Then obviously year end potential of trying to move back into that 44 plus range and soften the overall annual decline that has taken place so far. And as you can see, if I shrink this up, going back to the beginning of the year, that's where we began up near the 48. That open on there, yeah, it was a little over 48, and we're all the way down to 39. So it's been not the best year on record, but also not the worst. I mean, when you given the aggregate of what we saw from an increase standpoint, this has been relatively benign. As always, though, any relevant updates, I will update you. As always, trade well. Talk in there.